All right. Okay, so any questions what we went through yesterday, liquidity, order blocks, anything you guys want to go through right now before we start with the topic of today? Or everything is clear for you guys? Is it clear?
Yes, clear.
Yeah, I think there may be some questions. I was just trying to rewatch yesterday's session again, but uh, it's just difficult because you're still trying to get a grasp of everything. Maybe after some subsequent a couple of more watches, maybe the questions will become more and more clear. I saw some spots that I could have asked questions, but I think they will probably answer themselves out once we start to get into maybe live sessions and you start to see things play out.
All right, cool. So today we're gonna go into price action and type of entries. Basically, what we look for once market get to those order blocks and things like that. Okay, so let's say that this is gonna be our order block right here, right? We're recording, right? So let's say this is gonna be our order block. So what we're looking for here, every single time frame, every single thing that we're gonna see here is gonna be based on the 5 minutes time frame. Okay. So you guys can have that clear. So we have three type of entries that I look for. All of them works the same. All of them work great. Okay, it's not gonna be like one is better than the other. All of them is basically the same. It's different. It's the same kind of type of entry. It's just different variations. Okay. So we're gonna have, like, say, market's doing a pullback right here, right? So we're looking for buys. Market's doing a pullback and going into this order block right here. So what we're looking for is, first of all, we need to see a break in our favor in order for us to look for a setup. So let's say market do a lower high and a lower low. I want to see the market giving me a break to my favor. It could be here the market create a new this lower high and break above this lower high right here. Okay. Or it could be like a minor double bottom and break the neck right here, right? But actual break. We cannot, if you have a wick right here, we need to see the market closing actually above the wick with a body candle. It has to be an actual break for us to have this confirmation, okay? So we want to see, like I said, a simple break in our favor on 5 minutes. So let's say we have a lower high, lower low, tapping into the order block. I want to see the market giving me a break right here. So that's going to be a break of a structure. And when market do that, as we're looking for buys, at this point, we have a higher high. So that means we have a higher low right here. And this is going to be located, this is going to have liquidity grab below this level right here. Okay. So that's going to be liquidity. So as we looking at, as we just talked about yesterday, there's going to be minor order blocks on the lower time frame. So when market do this break right here on the 5, it's going to be having a small order block right here on 5 minutes. Okay. So I want to see the market kind of coming back. First of all, like I said, we always need to wait for the market to grab liquidity before doing anything. So we want to see the market coming back, grabbing liquidity. So there's going to be the two type of liquidity here can happen. The first one is going to be the liquidity sweep. So market's going to go all the way down here and it's going to try to break below it and it's going to fail, right? And it's going to hold into the 5 minutes order block that we have here. And it's going to do a wick right here that is going to be literally sweeping the liquidity that is below the swing low here, okay? But it's going to end out closing above it. So if market do this, what we want to see next about that is going to be a minor break after that, okay? And that's when we're going to be taking the trade for us. So as I said, the first thing we need to see is going to be a break in our favor. Right here, break of a structure is going to create a minor order block right here. We mark up the order block, and we want to see the market grab liquidity from the swing low right here. So it could be the liquidity sweep right here, which is going to be market try to breaks below. It fails, close above it, respect this minor order block right here, And after that, we just need a small break right here. It doesn't have to be a double bottom. It just have to be a minor break here for us to look for the setup. And that's when we're going to be taking the buy. Okay. So that's basically the type of entry number one. There's another variation, which is going to be this one. So instead of market actually going here and doing the liquidity sweep, we actually going to have the market closing below it with a body candle right here, like this. Okay. Below the swing low is going to close with a body candle. And even though market have closed below this level, the buy setup is still valid. And we have to wait for the market to give us a simple break right here. So as this is basically also counted as a liquidity grab, what we talked about yesterday. So market basically went down here, create a new lower low, breaking the previous swing low. And what we need to do is like, if market do this, we want to see the market giving us maybe a double bottom and a break right away, and then we can take the buy right here. Of course, it had to be in our order block. So it could be in the same order block that we have here, the big one, or it could be in our other order block that is maybe more down right here, right? So we want to see the market doing this and give us a break back again. And once you do that, we can take the buy from here. When this is gonna be invalidated, when we cannot say, okay, this is not a valid trade for me to take it, is if market actually create a new lower low like this with a body candle, do a lower high, and do another break. So at that point, if market do that, we have to wait for everything to be basically reset back again, which means it's gonna be giving us one more time a break in our favor, grab liquidity, and give us a confirmation for us to take the trade. Okay. So when it's gonna be invalidated, if market breaks below it with a body candle and do a lower high and do another lower low, at that point everything is reset, and we have to wait for the confirmation to be for everything again. Everything that we have here, it have to happen again one more time. But if not, if market do like a double bottom, it doesn't create a new lower low. If it do a break after that, we should take the buy, and that's gonna be good to go for us to take that position right here. And that's gonna be the type of entry number one. Okay.
Do we need to, excuse me, do we need to wait for only in this case for one break of structure, or for two consecutive, one, two, back to
No,
back?
just one, because we
Just
have
one.
everything in our favor for us to
Mhm.
look for the setup right here. Okay.
Okay, thank you.
So that's basically what we have here. Okay. That's a type of entry number one. So type of entry number two is going to be kind of the same, but it's going to be a little bit different. So we're going to have lower high, lower low, lower high, lower low, lower high. Getting into the order block one more time, the break in our favor right here, break of a structure. Then we're going to see the market creating a minor high or low right here. So it's going to do like something like this, high or low, and it might do a double top. It could be a double top, or it can actually create a new higher high. Either one should be fine. It's going to be the same. Okay. So what we need to see is market actually, as market create a new higher low internally, that means we have liquidity below this level right here. You guys already know that in every single higher low, there's liquidity, even though it doesn't create a new higher high. So if market go out here, like I said, double top or do a new higher high, it's basically the same thing here. Okay. So we're gonna mark up the liquidity right here below the swing low. And there's gonna be a minor order block right here that create this break. Okay. We're gonna mark up this. So what we need to see is basically market coming back and grabbing this liquidity, tapping into this order block, and then give us a minor break in our favor for us to take the trade. Okay. Or it could be the Senate variation, which is gonna be that instead of market actually holding into this level right here, this order block, market is gonna go through here and it's gonna close below it with a body candle of the swing low. And as I said, once you get to this, maybe this order block, or maybe one that is more, down, if market doesn't create a new lower low like this, then you're still fine to look for the setup. If you do a double bottom, all right, and do a break right here, we can take the buy. Okay. Does it make sense?
Yeah.
Yes. Hey, Vlad, question for you.
Yeah.
And sorry to the team, I don't mean to hold us back, but you mind if I just draw something real quick on your chart?
Yeah, go
So right here, so I'm sure there are cases that the price never goes back to retest and it continues to climb up. In that instance, what do you do?
I mean, I'm not looking for the retest where you guys see like the drawing. I don't care about the retest. I just want the market to break above the level here and close with a body candle. If you do that, and if it's close enough of the level of break, I take it. I don't have to do the retest. When I wait for a retest, this is the market just start pushing aggressively. Then at that point, we need to see a retest into the level because stop loss isn't gonna make sense. Okay.
Okay. And so in this instance, as soon as the price breaks below, I know on your call, sometimes you say close above a certain point, close above a certain candle. In this case, once it closed above this point, then you just take the trade.
No. Sometimes I take it before candle close. But the close is gonna be when market actually close with the candle, right? When the candle close above the level. When I take it before candle close, it's like I need at least to see maybe volume going through the level, right? Breaking through that, and also want to see at least 2 or 3 minutes above the level. So for me to have like a more confirmation, because sometimes you're gonna have a lot of pressure through that, and you have the break, but it might happen on the first minute of this new 5 minutes, for example. So you still have 4 minutes to go before the candle close. If you take it there, you still have 4 minutes and market can easily close below it, and then you basically get fucked up. So at that point, you had to wait for at least a couple of minutes, maybe 2 minutes before candle close, full close, and then you can enter there a couple of positions like I do. And then once you have the full close, that's when you're gonna get into the full position because you have the confirmation you're looking for. Okay.
So one question. Sorry. Yeah.
Oh, I was just gonna say that real quick. So for this level, best for us to do is wait till the reset here and then take.
Not necessarily. You don't need to wait for the retest. As I said, if it close enough, because like say that this is your level and market close just too close to the level, you don't have to wait for a retest. You can get all your position right there. When you need to see a wait for a retest is when your market actually close too high out of the level, and you cannot get into a trade here because the stop loss doesn't make sense. So you have to wait for the retest to have a better stop loss. Okay.
Okay. So and then once we are on, I'm so sorry. So whilst we are on that, your stop loss will be right below this or right below this.
We're gonna talk about that on risk management. It's not about like the stop loss is not gonna be based on levels. It's gonna be based on points. So when we get to the risk management, you guys are gonna know like the type of like the stop loss and everything when it comes to like when to use and everything. Okay.
One question, Vlad. So in case that even if it's 2-3 minutes left for the candle close, but it's 70% of the candle above it breaks, it's enough confirmations to enter the position, right? If 70 or 80% of the candle is already above the level,
but you mean like actual close, or it haven't closed yet?
No, it haven't closed yet. It's 2-3 minutes.
No. Like I said, for me to have it to get it into the trade before the candle close, I need to see at least like the candle just have 2 minutes before close. Like I need to see like market's almost about to close for me to get in, because as I said, if the market breaks through aggressively on the first 1 minute of that new 5 minutes candle, you still have 4 minutes to go for that candle to close, and sometimes market can just close below it, and you can be in a bad trade, if it makes sense. So I always wait for maybe 2-3 minutes before I get in, and once it's just maybe 2 minutes before candle close, if I see pressure, I might enter a couple of positions. I manage my risk here because I still don't have like the full confirmation. So when I do that, I enter a couple of positions, and like say I'm gonna be entering 4 positions, I enter 2, and then once it breaks and I have the kind of confirmation, I wait for a retest if it's too high, and then enter the rest of my positions. If not, if it's close enough, I enter everything there once I have the confirmation.
Perfect. Thank you.
All right. So that's basically type of entry number 2 right here. And the number 3 is gonna be kind of the same thing, but a little bit different. So we're gonna be lower low, lower high, lower low, lower high, going into the level, tapping into the order block, do a lower high, higher low, break right here. So this is gonna be considered as an internal break because my swing high is gonna be here and my swing low is gonna be here, right? So that's gonna be like internal break, but it's valid anyways. So we have a break here, right? And as I said, we have a higher low right here. So we mark up our higher low, which is liquidity, and we're gonna mark up the minor level right here or order block. So we wanna see the market grabbing liquidity right here. Boom. It can hold the order block and do a minor break right here in our favor, and we can take the trade right here. Same variation, market can actually break through here with a body candle. And if as far as market doesn't do a new lower low like this, and you do a double top, a double bottom, and then give us a break, we can take it with no problem right here. When it's invalidated is when market do one break through it with a body candle and actually do a new lower low right here. Once you do that, everything is invalidated and you cannot take the trade. You have to wait for everything to happen again, to wait for a break in your favor and all that here, okay? So this is type of entry number 3, right? So this type of entries that you guys can see here is based on 5 minutes, all of them, 5 minutes. And one thing that you guys are gonna be have to know is that all these kind of type of entries are when market do 2 or more breaks on the pullback on the internal structure. What I mean by this, if we're bullish on the 4-hour and you mark up your swing high right here and your swing low, and on the pullback, market have done 2 or more breaks on 5 or 15, that's when you're gonna be applying this type of entries. Because as you guys can see, everything that I have in common here, all this type of entries, like the first break in our favor. Why we have to wait for a break in our favor first? Because we have the internal structure bearish. So with that first break in our favor, we have like a confirmation that market is looking to switch back again into the uptrend structure, okay? So as I said, this type of entries are gonna be taking it. We're gonna be looking for them when we have the internal structure bearish. And when we know it's bearish, when we have 2 or more breaks with the pullback, okay? Does it make sense here?
Yes.
Yeah.
All right. So what do I need to see in case a market actually doesn't do 2 breaks or more? Like the internal structure is not bearish. It's gonna be pretty simple, but it's gonna be using the liquidity, order block, and basically everything. So let's say the market do like a higher high, higher low, higher high, higher low, and then do like a minor higher low right here and do a break, just one break. Like I said, a pullback on a break, and you go to this order block right here. Boom. Tapping into the order block. As we talk about, this is a minor higher low, which have liquidity. So here, as the market haven't actually changed to bearish on the pullback, and you only have one break, which is liquidity grab and pullback. In this point, we just need the market to grab the liquidity, tapping into the order block, and then give me a minor break in our favor. And that's when we're gonna be looking for our entry. Okay, so something like this. So how, like I said, when market is bearish internally, then we had applied this type of entry, which is gonna be first break in our favor, then liquidity grab, order block top, and then a minor break in our favor, and then we can take the trade. When the market is not bearish internally, which means is that it haven't created multiple breaks, it's just one break. So that means internally we're still bullish. So what we have is basically a liquidity grab, an order block top, and then a minor break in our favor, and we should be good to go to take the buy. Okay, so you always have to keep in mind that this type of entries are gonna be on 5 minutes. Remember that 5 minutes time frame. Okay, and everything is gonna be all depends, like I said, when it doesn't have multiple breaks, and when it have 2 or more breaks. In less words, internal is bearish. We need to wait for this type of entries. And when it's bullish still, which is have only 1 break, then we only have to go with this type of entries right here. Okay? Remember that in every single setup that we're looking for, we have to see 3 things for us to take the trade. Number 1, we need to see the liquidity grab. It had to have liquidity grab. We cannot take a trade if we haven't seen the liquidity grab. Second, we must tap into our order block. If it grab liquidity like this, like say something like this, it grab liquidity and it doesn't do another, it doesn't tapping into the order block right here. Like say it breaks here and then it start going up without tapping into the order block, then we don't have a setup. Okay? At that point, we have to wait for the market to either create a new higher high, we mark out the liquidity, and wait for the market to grab liquidity and tapping into the order block. This type of thing cannot be missing. Not even one thing can be missed for you to take the trade. So liquidity grab, order block top, and then the break on your favor. Okay? So you have to keep it clear of that, because that's gonna be like a blueprint steps for you to have like the steps for you to look for a setup. Okay? I don't know if you guys have any questions before we go into a couple examples of this.
Yes, Vlad, I have a question. When you say you have to tap the order block when the pullback, when the complex pullback is going, we have to wait until the 1 hour order blocks.
No, it doesn't have to be a 1 hour order block. It could be a 15 minutes order block as well.
Could be a 15 minutes. Okay. Thanks.
So it don't have to be always like a 1 hour order block.
Or even 5 minutes, correct?
Yeah, even 5 minutes is good, you know?
Okay.
We just need that order block. Like that's what we need. We need an order block top. But of course, the bigger the order block, the better confirmation could be for you. Okay.
Okay.
So liquidity grab, order block, break of structure on our favor, and then we good to go enter position.
Exactly.
Okay.
When it's just 1 break, when market just do 1 break. If it's multiple breaks, like the actual internal structure is bearish, then the first thing you need to wait for is a break on your favor, okay? And then these steps: liquidity grab, order block top, and then the minor break, and then you take the trade. Okay.
Okay. Thank you.
Make sense, everybody?
Hey, Vlad, you generally say we look for the like 15 minutes setups will play higher probability than 5 minutes.
You mean like looking at for the 15 minutes time frame to look for the setup, the entries?
Yeah.
Of course, when you have like a bigger time frame versus a lower time frame, they're gonna be way more confirmation, or they're gonna be more probability. But based on my numbers, I have a 78% win rate. So for me, that's a decent number, and I don't want more confirmation. Well, I don't need to use the 15 minutes time frame, because if you use the 15 minutes time frame and wait for this type of entries like here, like that, you're probably gonna be don't having like that kind of confirmation so often. I don't know if it makes sense, because that's what I basically prefer to go into the 5 minutes, because you're gonna see more candles in a little in less time, right? Because when you have like this type of confirmation on 15, it's either gonna be 2 hours or even more than 2 hours, and you don't gonna see it so often. But if you guys don't want to take it on the 5, which that's what I'm teaching you guys here, taking it on the 5, and I recommend you guys not to change anything. But if you guys want to take it on the 5, on the 15, it's up to you. It's gonna be the same thing that we're looking at here. It's gonna be the same confirmation, only on 15 minutes. Like I said, what I'm teaching you guys is 5 minutes, so I recommend you guys to do the same. Okay.
If the order block is a 15 minutes order block, but you use the 5 minutes confirmation.
Yeah. Same thing. Remember that what I say here is super simple. If we have multiple breaks on the pullback, meaning 2 or more breaks, we're gonna be using this type of confirmations to get on the trade. It could be on 15 minutes order block. It can happen. It could be on the 1 hour order block. It could be on the 4 hour order block. What we have to make sure is that market do this type of confirmation in our order block. Okay. If it's like this, it's also have to be on a 5 minutes order block. What we need to see is market tapping into our order block and see this kind of confirmation for us to take the trade. Okay. 15, 1 hour, 4 hour, anyone that actually tapping into and this give you this confirmation, you should be good to go to take it, because that's what I said before. I don't care about the order block. I don't care which one is going to be the best. The one that have more volume on it, the one that have imbalance on it. I don't mind that. What I mind is that when market gets there, I want to see this type of confirmation on it. And once you do, I have my confluences to getting into that trade, because the confluences told me that order block was enough for me to push the market up or going down. Make sense?
Yeah, like
Hey,
when we
hey,
can order block is invalidate. Like after multiple touches, are the candle close below that order
Yeah,
block?
if it's gonna be invalidated if, like, say this is our order block right here and market close below it with a body candle like this. Okay, if you do like say that this is the order block and market close in the middle right here, it's still valid. The only time it's gonna be invalidated when market actually break through it with a body candle, like a real breakthrough it. That's when it's gonna be invalidated. Okay.
Multiple touches will not invalidate it, right? Multiple touches will not invalidate the order block, right?
I didn't get that. Can you repeat that again?
Like if the order block has the multiple touches, like multiple times the price is testing that order block.
No. That's what I said before. That don't pay attention to, like I said, there's different ways for people to trade. There's people that said, okay, this order block has been mitigated before. I'm not taking the trade from this order block. I don't care about that. I care about the price action on the order block. Meaning, if that order block has been tapped multiple times, like 3 or 4 times, I don't care. If it gets there and give me confirmation, I'm taking the order block for my trade. Okay, so the only time the order block is gonna be invalidated for me if it breaks through with a body candle. If you have been tapping before, that doesn't matter as far as market give me the confirmation, because as I said, we're not taking the trades based on reactions. We're taking based on price action. So when market gets there, we need to see confirmation. So either the order block has been tapped before. If you give me this confirmation that I'm looking for, I'm taking it. And it's worked great for me so far. Okay.
hey, Brad, just to confirm something, and you've already said, but just want to be sure I get an understanding of it. So the first example over here, when you have 2 breaks on an internal structure to the going down, you look at the price touching the order block and then breaking in your favor and then liquidity. Is that correct order?
Yeah, I mean, no. So it's gonna be, first of all, of course, you need to wait for the market to get to a certain level, which is gonna be a POI, a point of interest. The first step on the entry is gonna be break on your favor right here, right?
Yeah.
Second, grab the liquidity. Third is gonna be giving you a minor. Third is tapping into an order block, which could be the minor order block that it created, or tapping into the big order block that you have here, right? Either one, which is fine. You have to tapping into an order block, liquidity, order block tap, and then fourth is gonna be literally the break. Then you take the trade. That's gonna be like kind of the order for you to take it.
Okay.
And from your experience, Vlad, what 2 pairs are getting the most, like the better setups? Like for instance, the external order block on 4 hour and then entries on the 5 minute, or 1 hour and 5 minute entries?
You mean like which? Can you repeat that again so I can get it?
Sorry. So when, if from your experience, when on what order blocks setups giving the best and most the best setups. Like for instance, 1 hour order block, and you finding the most entries between on 5 minutes. If you know what I mean.
You mean like which one? What order block give me the best setups? That's what you're saying?
Yes.
So,
So what pair of 2 order blocks? So you're marking the external order block on, let's say, 1 hour, and you're looking for a setup on 5 minutes, and that's where you finding the most occurring setups in the market from your experience.
I mean,
Sorry.
of course, like, I mean, what I just get the question. So basically, like, always it's gonna be like the bigger time frame order block is gonna be way better than the smaller time frame order blocks. But based on my experience, I see setups playing pretty good on 15 minutes order blocks external, and also order blocks on 5 minutes as well. So I don't going into base on which one is gonna be the best on my experience. I just go based on what market do on the order block. So that's what I always keep saying, that I don't mind, or it doesn't matter for me the time frame order block that I'm in, as far as market give me the confirmation that I'm looking for. The confirmation in this type of entries or type of price action is gonna give me the confirmation that I'm looking, and it's gonna tell me if that order block is gonna be enough for me to look for the setup right there. But of course, like I said, the bigger time frame, the bigger the order block is when it comes to time frame, the better it's gonna be, because you have more confirmation. But doesn't mean that you cannot take the trade on any order block, especially if market have given you the confirmation on the order block, if it makes sense.
Yes. Thank you.
Vlad, I have a question. As we know, if the time frame is higher, the order block is much bigger than 5 minutes candles.
Exactly.
So if the prices, the candles are inside the bigger time frame order block, and we are in a 5 minutes candles, and we have the break of structure, but still inside the order block.
Yeah, that's fine. I mean, it doesn't matter. Well, you need to see like the price action going into the order block. So what I do mainly is like say that you have a 1 hour order block, like a big one, and then I redefine by going into 15 maybe, and find like a 15 minutes order block inside of the 1 hour order block. So that way you can like kind of looking for more precise order blocks. But it doesn't matter if it doesn't go to the 15 minutes order block inside of the 1 hour. If you tapping into the 1 hour and give you the confirmation on the bigger one, then that's good. You're good to go, even though you haven't tapping into a small one inside of the bigger one, if it makes sense.
Okay. So just waiting for the reaction, and that's it.
Yeah, because 1 hour order block usually is bigger. So
yeah, it's gonna be a couple of candles, but like I said, it doesn't have to go, like, it doesn't matter if you go to the bigger one and it goes there inside of the order block, and you have a market up and give you this kind of confirmation, you're good to go to take it. Okay, especially because if you go into the pullback and you do that, like say that this is a 1 hour order block right here, the one that we have. So you're also gonna have like the break on your favor, and you're gonna have a minor order block created on 5 minutes right here. So you're gonna have two confirmation: the bigger one that the market top when the pullback, and the small one that also is gonna be top when grab the liquidity for you to look for the setup, if it makes sense.
Yeah, perfect.
All right.
Hey, Vlad, before you move on, so for us newbies, would you recommend any type of indicators for us to be able to help us easily identify break of structures and stuff like that?
Video, so that's what you said, like a video? Or
no, indicators, any specific. Okay.
I never use indicators. The only indicators that I used before was RSI, and Fibonacci is not an indicator, it's a tool, but that's the only thing that I use in my entire life as a trader, and I don't use it anymore because I don't need it. So I don't recommend you guys to use indicators to wait for breakout structure, because they never gonna be accurate when it comes to looking at how you see the market on the real time, if it makes sense. So I don't recommend you guys to do that. Just do it, get to work and, spend time on the charts and get good at looking at the breaks. And once you get that good, then it's going to be better than any indicator that you can find out there. Okay.
Right.
Price action is the
Sorry,
king.
sorry, Vladimir, when you say, for example, when you detect the price action, in case you open a position or a couple of positions when the candle is above the last level, you say you can open a few positions before close the candle, 1 minute or 30 seconds before close the candle when you detect so much volume. Do you use volume in this case?
No. What I mean by volume is when I mean, at least me, I know when I kind of have volume with the pressure that is breaking through the level. Okay, that is how like instead of volume, like say pressure. Okay, because I don't use indicator. So if you have pressure through break and I have 2 minutes left before the candle close, I basically open a couple of positions at that point. But it's all about pressure, like how aggressive it go through the level, right?
Okay, so clear. Thanks.
All right. Any questions? Everything is clear, so we can move into examples right now.
All clear.
All right, cool.
Yes.
So we're gonna go into let's see, first of all, let's see 4 hour first. I'm gonna go into buy structure here first. So we're gonna go into right here. See if we can see something here. All right. So right now what we have is literally a break of a structure right here to the upside on the 4 hour. Okay. So that means we have our swing high and our swing low right here. Okay. So we have this order block on 4 hour. I'm gonna just play it out here. Okay. And I'm gonna see, as you guys can see, we have the pullback already. So what I have to pay attention to is when I drop to the lower time frame, 5 and 15, I want to make sure how many breaks market have done, because depending on how many breaks we have to the downside on the pullback, that's what we're gonna be applying like this type of entry right here. Okay. So what I do is just gonna go into the 1 hour right here, and I'm gonna look for possible levels. What I see here is that market actually grab liquidity out of this higher low. You guys can see higher high, higher low right here. So that was a higher low, right? So that was liquidity here. So mark up liquidity. Okay. I'm gonna go to the 15 minutes. On the 15 minutes, right away, I can see that market literally is gonna go back here. Okay. Just so I don't wanna, so you guys can see what I mean. So right here, when we go back in here, what we see? Multiple breaks to the downside. Okay, more than 2 breaks. So that means internally we're bearish. So if we're bearish, what do we need to do here? Right. What the heck? Okay. All right. Anyways, so I don't know where it's at, but basically, if it's bearish internally, that means that we're looking at waiting for the market to get to our order block and then give us a break in our favor, liquidity grab, tapping into a minor order block, and then give us a price action, which is going to be a minor break in our favor. Okay. So I see here clearly I have a 1 hour liquidity grab. I didn't mark any order block on the 1 hour because it was too far away from the level. So I'm going to go into maybe 5 minutes to see if I see another order block. But as of right now, what I saw and pay attention to, it was how many breaks market has on the pullback. I know it has more than 2 breaks. So that means I know I'm bearish internally. Okay. When we go to the 5 minutes, I don't see any order block right here. So that means, okay, we have the liquidity grab. I don't have any order block. I cannot take a trade from here. So I need to see a market either creating a new levels right here, a new structure, create an order block that I can use for my trade. Okay. So what I do is just wait for the market to create the levels here. Okay. So here what market did was give me a break on my favor right here. Makes sense? So we have a break on our favor. So that means we have the first step. Okay. First step, break on our favor. What's the next step? Liquidity grab. So I need to see the market to grab liquidity above, below this high or low right here, or either this one right here, the swing, and we have this minor order block right here on the 5. Okay. Liquidity and liquidity. So now what we need to see the market to grab liquidity. All right. So we're going to go back again here. So what do we have here? a double top, right? Higher high, higher low, equal high, or double top, whatever you want to call it. So that's a higher low. Do we have liquidity there? Yes. So that's our liquidity. I mark up my liquidity. Okay. So we need to see the market to grab liquidity. So what we have here, liquidity grab. Make sense?
Yeah.
All right. So let's see here. Okay. So right here, go back again. So right here, do we have, let me see something. So we have the liquidity grab, but I don't see the market tapping into the order block. Well, let's see on 15, if we have the tapping into the order block. Let's see. We're moving, like I said, week to week. I don't see market tapping into the order block right here. So that means, yeah, we grab liquidity, but we never tapping into the order block. Let's see if it tapping into it. Nah, it doesn't. So I don't have any confirmation yet. I cannot take the trade. So what I do is like a market create another high, kind of double top thing. So I need to see another higher high, or at least market surpassing the swing high for me to have a higher low so I can mark up liquidity. Because as of right now, there was liquidity, but this is a lower low here. Okay, so that's not liquidity for me. Okay, so I wait. We have another swing. So now I can mark up this as my swing, my liquidity right here. Okay, so I need to see market grab liquidity. One more time, market do another higher high. This is a higher low. So I'm marking up liquidity here. Okay, just gonna go here, right here. Let's see. So we just kind of play it out right here. So right here, you guys can see that we have clearly, let's see something. All right, let's see. Looking at 15 minutes. Okay, cool. I'm gonna go back again here. So here we have the liquidity grab right here. That happens on this one. Higher high, higher low, it grabbed liquidity. So for me, a good entry would have been right here. But this is basically US 30. So we don't gonna be trading US 30 on Asia or London or anything like that. So for me, it would be an entry right here, maybe, based on the strategy right here. It would be depending on the stop loss. Would it be something like this? We don't want to be paying attention to the stop loss and anything here, right? But that's basically on the time. At this point, market basically pushed down because it's not the time for us to trade. We're only gonna be trading US 30 at a specific time, like US 30. It's gonna be 9:30 and above on the opening market here. But basically here you guys can see that we have the liquidity grab and the break in our favor. So in the order block top. So that would be the entry for us in New York. Like say it would have happened in New York. I would have taken the trade after breaking above maybe this level here, right here. Okay, because we have the liquidity grab, we have the order block top, and then we have the minor break in our favor right here. Okay, so like say what happens once you get into the time that we can trade it. So if you can see confirmation like that right here. Okay, we're just gonna go back again, and we're gonna go to the same example here, but now on the time that we can trade. Okay, so this is 8. Okay, so we're still literally looking for buys because what we have here is swing high, swing low, and we're still looking for buys because the structure is still bullish. Okay, same thing. We don't see any order block right here, right now, but we already know the market's basically pulling back and it's kind of creating internal structure is bearish. So what we need to see a break in our favor. So what we will have to wait, a break in our favor right here. Okay, so right now we have the break. The break happens to be here. Okay, break in our favor. Now what we have order block, minor order block, and then we have liquidity below here. Okay, we want to wait. Market carry another higher high. That's fine. We're gonna mark up the last higher low, which is gonna be liquidity, and we wait for the market to grab liquidity for us to look for the setup. Okay, market create another higher low. We move the liquidity to the new higher low, and we have an order block right here. So we mark up the order blocks, but we need to wait for the market to grab the liquidity before we get involved into the trade. So what happens here? Market grab liquidity. tapping into the order block. Now what we need to see, the break, okay? All right, so market basically didn't create the break, continue going down, but it's still valid because we're still in the order block and we still grab liquidity. So we need to wait for the break in our favor, okay? Here the break, and that would be the entry for us right here. We're not gonna be paying attention to the stop loss and anything like that. That would be the entry here. Okay. Do you guys follow the entry here? Exactly what we did? Does it make sense?
Yes.
No?
Yes.
So you guys, for the people that didn't get it, we're gonna go back again and do it one more time. So market, the first thing that we need to see, because we're still bearish internally, right? So what we just went through, if market is bearish internally, they have multiple breaks, 1 or 2 breaks, the first thing that we need to see is a break in our favor. So market actually give us the break, the first break here, right? Break right here. It create a new order block on the minor time frame, which is 5 minutes. We mark up the liquidity here, but market never grab the liquidity. Then do a pullback, do a new higher high. We mark up the new liquidity, which is gonna be this one, new higher low. Market basically create another higher high, another higher low, another higher high, and we mark up the liquidity, the most recent one, which is gonna be this one, in the order block. Market goes and grab the liquidity, right? Tapping into the order block. So we have the 2 things that we're looking for before the entry, which is gonna be liquidity grab and order block top. Now what we need is the break in our favor. So market basically come here, create a minor level right here, which is gonna be a lower high. If market would have break up above this level right here, we could have take the trade because it's a simple break after liquidity grab and an order block. We just need a simple break. So if market do this and would have break above here, we can take the trade either way, okay? But market never goes and break here, continue going down, went to the order block, and then create a minor lower high. It's a minor level right here. We mark it up, and then we have the break above that level, and that would be the confirmation for us to take the buy. Questions for anybody here?
No questions for me.
All right. Cool. So that's that. Okay, go ahead. What's that?
Oh, I was just gonna say, so on a higher low, that's that one that I know. I thought I got it, but it's still confusing me a little bit. So why isn't this over here marked as the higher low, or which one? Yeah, because you mark this one, the liquidity grab and the higher low right here when this candle already opened, which is kind of higher than that one. Maybe I'm confusing myself.
No, because the higher low is, the higher low is gonna be the pullback, the lowest point of the pullback that create a new swing high or a new higher high or a double top.
Okay.
So here you have the higher high, the bearish candle, right? But this bearish candle, but this also a star bearish create a swing low, which is the lowest point of the pullback. So that's gonna be here, and then we have the push here that create a new higher high. So the higher low is gonna be here.
Okay.
Make sense?
Okay. Yeah. Okay. Thank you.
All right.
Vlad, I have a question.
Go ahead.
Now the price here, it will engulf the, like it will go up. We don't have the internal break. Still we mark it as a break here and we can enter the trade.
Yeah, you can take it there, but all depends on the stop loss. Because let's say you take it here, right? And let's say that you have a stop loss of 30 pips. At that point, if you don't have any level to cover, because I like to have like a stop loss, something like this. You see, we have the break right here. You enter here, your stop loss is below the swing low here, right? Which is going to be covered by this kind of support maybe here, right? But if you take it here like this, and the stop loss is like in the middle of nowhere, we're not kind of level to hold it in case market do a pullback, then it's not going to be a good entry based on the stop loss. Not based on the strategy. It can be taken, but if you take it like that, market can easily just pull back right here stop you out, and then going on your way. So what I do when it happens like that, simple. I'm gonna be, if market do the break right here, right? And do a pullback. And then when I do a second break, I can take it on the second break right here, because now I have a better stop loss because it's gonna be covered by this minor high or low. Does it make sense?
Yeah, perfect.
All right. So this example, guys, is based on 2 or more breaks in the pullback, when market is basically bearish on the pullback. Okay, let's go for an example that market is actually still bullish internally here. Okay, so okay, it goes something like maybe right here. Okay, cool. This one could be do the job. Let's see something here. Let's see 5. Now we have 2 breaks here. Just looking for just one break. Okay. So all right. So I think I got an idea here of the just one break. Okay. So here you guys can see that market is basically bullish, right? On the 5 minutes. So if I go to the 1 hour, we're bullish, you guys can see. So we're looking at for buys 100%. Okay. So when I go to the 5 minutes, what I want to see, like as I always keep saying that you have to make sure that the internal, when you go back into this lower time frame, you want to see what exactly the lower time frame is doing on the pullback. You have more than 2 breaks. It's basically bearish internally. So at that point, if it's like that, then I have to apply the type of entries. If not, then we just should be waiting for a liquidity grab, tapping into an order block and a simple break. So here, what I see is like I'm basically bullish internally. So what I have to wait for is just market to create a liquidity, which is going to be a higher low. Market grab that liquidity, tapping into an order block and a minor break on my favor. Okay. So right here, what we have, higher high, pullback, and then a bullish candle. So that means we have a higher low right here. Boom. So now what we need the market to grab liquidity. So we grab liquidity right here. Okay. What is our order block? All the way down right here. Well, let's say that if we have one on 15, maybe something bigger. Okay. We have on the 15, we have one here. Let's see on the 1 hour. Okay. On the 1 hour, we have maybe this one right here. Okay. Okay, so you guys can see here, market went up, right? But it didn't give us a break. I mean, it gave us a break right here. Let's just go back again so you guys can see. It gave us a break right here above this level.
Internally.
Exactly, but it never tapping into an order block. So the liquidity graph happens, but it never tapping into any order block. Not the 1 hour, not the 5 minutes, nothing. So that means we don't have a setup. So, okay, it grab liquidity, it breaks through, I'm not taking the trade. So now I have another higher low right here. This is liquidity. I need to see the market to grab the liquidity and tapping into an order block. Now I have 2 out of 3. Liquidity grab, order block. Now I need to see the break. Okay. And this is the importance of actually waiting for the market to actually tapping into an order block after the liquidity grab. Because you guys can see, if you grab liquidity and you would have taken it here because you think it would have basically it's going to start pushing up, it would have stopped you out because market never tapping into an order block. So now we're tapping into the order block. So now what we have, liquidity grab. Well, we just went through like the example that you asked, basically a couple of minutes, somebody here. We got the liquidity grab. We're tapping into the order block and we have the break above here. Would I take it here? No, because if I do this and I do 40 pips, which is going to be kind of the stop loss we're going to do in US 30, I'm basically in the middle of nowhere for my stop loss to be, there. So what I'm going to do is just going to be waiting for the market to give me maybe another confirmation. So for example, here, I would wait for a second break. Would I take the trade here? The stop loss is covered right here by a structure.
Liquidity.
I mean, we don't need we don't need liquidity one more time because liquidity already happened here. Liquidity tapping into the order block. We didn't take it here on this break because it didn't make sense because the stop loss. So what I said yesterday, a couple minutes ago, is like if it breaks here, I want to see another higher low and another break here for me to have like a kind of cover with the stop loss. So here the stop loss the market continue going up, create the higher low here and give me the second break right here. So now if I take the trade here, my stop loss is covered by some structure right here. And now I can take it. And that would be the trade here for us.
Isn't that a bit far from the order block?
Which one?
The entry.
No, because if you're looking at you always have to look at what market's doing overall, because probably what we have here is market basically pushing to kind of going into the all-time high maybe here, or it's just kind of pushing to new levels right here. So yeah, it might be a little bit higher here, but that doesn't mean that market can continue going up. So just because the market is kind of far away from the order block, you cannot take the buy. Okay.
And then the question is if we are doing the entry based on the price action, maybe that's like less trends at that point because all the power was and on the way, you know, like it's already made a long trip, the price still there.
I mean, in that case, if you guys want to wait for everything to happen again, like wait for the market to grab liquidity, going into an order block, and then give you a price action, that's also a good thing to do. But that doesn't mean that you cannot take it like this, if it makes sense.
And then in any case, I see this example as then we've actually waited for all 3 points to be confirmed, right? We tap the order block, grab liquidity, and then we are waiting for a break. And then we finally had a break. So I think I'm comfortable with this example.
All right. I mean, like I said, the entry should have been here, guys. But if you take it here, would it be making sense based on a stop loss, even though it met our whole steps? No, because, okay, even though it's there, like the liquidity, the order block, and the break, it doesn't make sense on the stop loss. And sometimes when it doesn't make sense with the stop loss, when market do a pullback, it can just stop you out and then go your way. And then you just get stopped out in a good trade because you didn't pay attention to that little detail. So next time when you see something like this, just wait for another confirmation. Another break could be the thing. Or if market start pushing like this aggressively, then you just, okay, you know what? I don't see a good trade here. I'm going to be waiting for another confirmation. And you wait for another confirmation to come, which is going to be everything again. Liquidity grab, order block, and then price action, which is going to be the minor break on your favor.
So talking about probabilities would be better to wait again, no? Because maybe the entry just went.
It would be better. I mean, if it would have happened, the break would have happened here, like maybe the pullback in the second break would have happened here, it would be great for you to take it. But to highlight this here could play out, but the probability taking it here it's not gonna be as good as you taking it with something here. Make sense?
Mm-hmm. Yeah. So better be patient in that case.
Exactly. All right. So I don't know if you guys have any questions today for me. And
so Black, just to add, I think so I see 2 of your examples actually in this one. I remember one of the ones you drew, it just broke through this level, and I think you still took it on that one. But I can understand what you're saying on this one. Your reservation, your hesitation on this one is the stop loss. The stop loss is too big. Yeah.
It doesn't make sense. Even though we have everything that we want to, it doesn't make sense on the stop loss. So sometimes when something doesn't make sense when it comes to this, because you can take it play out pretty good, but what I seen happens most of the time is that market do a pullback, and then any pullback can get you out because you're not covered by any structure right here. You're in the middle of nowhere with your stop loss. Okay, so that's why by breaking it here, I wouldn't take it myself because it doesn't make sense. Simple.
The thing is that usually the last higher low in when it's a change, like a change of structure in this case, it plays as a support, no?
Right here, you said this one?
Feel safe. Yeah, so then
No, I wouldn't.
that
I
was a
wouldn't feel.
resistance.
To be honest, I wouldn't be safe to take it here because this candle, the whole candle here is an order block. Market can go
Okay.
to the 50% to the order block. It could be to the 80% of the order block. So you could just do this and then going up. That's why taking a trade right here doesn't make sense. But if I take it here, like say something like that, you have the order block right here. So you are covered by your stop loss is covered by more than 80% of the order block. So you're covered, pretty good cover on this trade right here. But here with this big candle, market can go and fill that candle, like the 0.5% of that candle or even more, and you can stop out into the trade. It's all about being patient. Sometimes you might see this and you might basically bang your head on the wall because you said, fuck, you have everything. But in reality, most of the time, you're going to get stopped out if you take it like this. So it's better to be patient and let something go and then wait for a better confirmation, a better entry for you that can be safe when it comes to the stop loss for you to take it. Okay.
My problem is when the order block is that big, as this example, I don't feel comfortable with the stop loss when it's so big, so wide.
Exactly. So at that point, what you need is, like I said, a second break, a confirmation. This one is too high, so I wouldn't take it on this one. But if the market would have done a second break right here near to this, then it would be good to take it here because you have another level here, high or low, that can be covering your stop loss. It wouldn't make sense. Okay.
Yeah.
All right, guys. So that's basically it for today, guys. So that's the type of entries. I know there's a lot of information here, and we didn't see too much examples, but we're gonna go back again tomorrow, and we're gonna do a couple examples before we going into the next topic, which is gonna be the trading plan, the risk management, and like the whole blueprint. Okay, and we're gonna go more examples like like this, and for sales and everything because. 1 hour is gonna be not enough for us to look for to explain the concept and actually look up for examples as well. Okay.
Sorry, before we go, is this strategy works for any pair? Like
Yeah, any pair.
USD
Any pair.
Perfect. Thank you.
I use it on
That's
US 30 Gold and NAS because they're my favorite. But you can use it in your dollar versus euro. GJ, any pair. I have students that are trading different thing on London, Asia, and they're working fine with that. It's just like
you never trade Forex, no?
Yeah, I mean at my beginnings, yes.
Oh.
But once I find out about US 30 and gold and everything, I just stopped trading because it doesn't make sense. I don't like how they move too slow. So I keep into the big ones, and yeah, that's it. I always keep saying to everybody, like when you learn to trade US 30, gold, or NAS, you're basically already on the big leagues, So you're trading Forex is basically going back again to double 8 or something like that.
Of those three, which one have you seen the highest win probability with?
I mean, my favorite is US 30, but I seen good win rate. No, when it comes to, I don't care about the win rate. Don't get me wrong, because I care about more ending in profit. And by ending in profit, just based on risk management and how you manage your trade. So, but gold, it works great on Asia for me, and also New York. But like I said, I like to always keep in just one specific pair or indices in this case on per session. I might do trades on gold sometimes on New York, but I like to keep my focus on just one pair per session because I can give it the details. I like to see the details, like the break, the liquidity, the order blocks, my structure, and I just skip to one single pair per session, and that give me better chances of having a better results. But in all then I seen it to work great. But my favorites, if you're gonna be based on the three that I have, I'm gonna do US 30 and gold Asia, New York, US 30.
You never look for a higher TP, even if you see the structure that's in your
mean,
favor?
I actually go in. I mean, I don't look for those home runs. That's the thing. I try to be consistent as much as I can. So for me to be consistent, based on my strategy, I seen like hitting TP2 is gonna be more often than going for those TP4 or TP5, if it makes sense. So yeah, there's gonna be days that I might just, okay, you know what? I see volume, I see pressure. I'm gonna hold it, but I don't always go for the home runs, because when you try to go for those home runs, mostly you're gonna be hitting, you know, more break evens than TPs. And I don't want to be just having a whole day looking at, you know, a TP2 maybe, and then just let it go because I wanted it to go for TP4. You know what I'm saying? But that's the way that I see it, and that's how I trade, and that's what works for me. You know, but you can hold it if you want. There's people that do TP3, TP4, but for me, TP2, and Sundays I do my home runs, which is fine, but I don't force it. If it comes, it comes.
I have one last question, sorry. In case, imagine that we are in a bullish trend, talking about the 4 hours time frame, and then we catch it that in the bottom, okay? It does the entire pullback in the order block of the 4 hours, and then it change of character in that moment. Should be smart to do it as a long run in that case, because
Like,
you have the entire, like
if you ask me, I would do 80% on TP2 and I let it runner. And sometimes on Sundays I might hold it the entire thing, but my personality, I'm not a good holder. That's what I keep saying to everybody. So I do what that works best for me. But if you allow yourself, you can hold and be patient and wait for 3-4 hours, 5 hours holding a trade and see basically that you can be in profit and then stop you out, then that's your type of personality. But for me, when I TP2 and I see profit, I close and I cannot hold it too much. When I hold a trade like that, it's basically against my will. Basically, I had to be out of the computer. I had to do a bunch of things to be able to hold a trade like that, because I'm not a good at holding. Simple.
So
you know, I can hold easy TP2, but not like, oh, I'm gonna be holding TP3, TP4 every single day, because it's not my I cannot do it because it's not my personality, if it makes sense.
Yeah, better you get UTP and that's it.
Yeah, that's why I said keep do what works for you. That's why you're gonna get consistent better, because a lot of people see somebody else on the you know, IG or something different, and they see, oh, this guy is holding one of 10, and you want to be like that guy. But in reality, are you actually capable of holding a trade like a whole 9 for you to be able to hit the TP10, for example? So people try to do something different that somebody else do and don't do what works for you. So you have to work based on your personality. And once you do that, that's when you can start getting more consistent, because you don't care about what somebody else say about. There's a lot of people say, oh, you should have hold your trade. Most of the people that talk shit, they're not consistent. So how am I gonna be paying attention to somebody that is not consistent when I'm making money every single day? So you have to do what works for you and what that fit your personality, if it makes sense. Okay.
Yeah, because then you will be always hungry. You will be always, you have to be like proud of the profits you made, because you will be like,
I'm here to make money. I'm not here to impress anybody. So if I hit TP2, I'm making money. That's what matters to me. If you want to impress somebody by hitting TP10, good for you. Not for me. You know? Right. So, all right, guys. So, this is all for today. I'll see you guys tomorrow. Like I said, any questions, just let me know. Tomorrow we're gonna go back again, like a couple examples more, because I know we didn't win. I mean, we didn't do, you know, examples enough here, but we're gonna have enough time to go through everything. Okay. So if you have any questions, just let me know through the chat, and I see you guys tomorrow. Okay.
Thank you so much.
All right. Thank you very much, Vlad.
Have a good one, y'all.
Guys.
Bye.
Bye-bye.